Welcome back, friend. Kris Krohn here, and today I want to talk about kind of an interesting question. Can you become your own bank? Now, I know that's got to sound a little bit weird, but today we're actually going to be talking about the merits of whole life insurance. And a lot of people think, oh yeah, I don't know if I want to watch that video. That's all about investing in your death. But I think today you're going to find that there's a ton of benefits in life. I call them living benefits that you actually get. And for those of you that are part of this channel because you're an investor or invest in real estate or you're trying to manifest the life that you want financially, I think you're about to become wildly surprised at a tool that many of the elite and wealthy leverage that most other people don't even know about.
'Cause we're gonna be legends. What we're doing here ain't just scary. It's about to be legendary.
Okay, joining me back today is Rob Gill in the house to help me have this conversation because we're talking about leveraging life insurance in a very, very different way. I think most people typically think, oh, life insurance or a whole life insurance policy is all about, well, you put money in this thing and then you die and then your family gets a benefit. And, that sounds a whole lot like term insurance, but there's actually a specific type of whole life policy, not in general, but there's a specific type of whole life policy, Rob, that has all sorts of additional benefits and living benefits that I think business owners and real estate investors and anyone that wants to become more financially savvy needs to know about. So check this out. Benefits, first of all, what is a whole life insurance policy?
It's a contract between yourself and an insurance company. Typically, we like to use mutual life insurance companies because we want to make sure as our cash value grows, the money you put into the policy, where you get a guaranteed rate of return of 4% by state law and by contract, plus a non-guaranteed dividend. So we want to make sure that as your money's growing in there, when you decide to utilize it for other opportunities, you could borrow from your policy, go buy, let's say, a piece of real estate, and your cash value is still going to earn the rate of return.
Okay, pause. I think this just went over some people's head. I want to make sure you actually heard and understand what Rob's actually talking about here. This is a type of life insurance policy that when you're putting money into it every month, there's a portion that goes to your death benefit. So if you die, family inherits money.
Absolutely.
But there's also a portion of it that is actually a living benefit that builds up kind of like a bank account. And you're saying that there's a way to pull that out and use it for investing or living or building a business or whatever person chooses?
Yes, absolutely. So if you just funded a policy from age 30 to 65 and retired, you could use that as a retirement supplement. However, along the way, what Kris is discussing is using the cash value, once again, after you do all your homework, you dot your I's, you cross your T's, for alternative investment strategies. So while you're planning for retirement, it now becomes a Swiss Army knife because now you could use the money for other investment opportunities. And now the same dollar, if properly designed, can be earning two rates of return off of the same dollar while having protection.
Pause, time out. Okay, so this is really important because I'm going to have you write down, if you're following along, there's a couple of key things that are so important. And you need to understand that not every whole life insurance policy does this. There's a link in the description below if you want to talk to the team that can actually expose you to those type of whole life insurance policies. Bottom line is it can often be one of the best tools to actually give you that versatility, that Swiss Army knife. So First of all, you just said when you put your money into it, you're mentioning that there's a guaranteed dividend rate.
No, let me correct that, if you don't mind. You have a guaranteed rate of return.
Yeah. So you have a guaranteed rate of return and...
separate from that, a non-guaranteed dividend.
Okay, so there can be dividends.
Yes.
You also have so in other words, you're actually making money on your money being in there.
Absolutely.
But I got to tell you,
over the life of the contract.
If I put my money in a bank, they're going to pay me maybe like 0.5% or 1/4% or 0.1%.
And you'll get taxed on it too.
And then you get taxed. But how's this different?
Well, because it's an insurance contract, so this goes back to when taxes were created in 1913, because the insurance industry was around since we were coming over from England, and when people got on boats coming over from England, they had life insurance on the boat. So that's when the insurance industry was created. If we want to get deep...
A little bit of a history lesson here.
Absolutely. If you want to get deep, they have more people in Congress right now than that are shielding this product as of today.
Okay.
That could always change.
All right.
From being invaded from the confiscatory nature of taxes from the U.S. government.
Okay. So there's a couple more things we're about to stack up, but just to be clear, you had mentioned like a 4%...
guaranteed by state law and by contract.
There's a 4%, and then on top of that, there's a dividend.
Yes.
So that already outweighs what you could get out of a basic savings account. Then it's tax-free as like as like a second bonus.
And when it comes to the tax side of it, once you start taking distributions, it's tax-free up to basis. And then to maintain that tax-free status, this is simple mechanics.
Yeah.
You would borrow from the policy to maintain that tax-free status.
Then I actually can grow it tax-free with those limitations that you shared.
Yep.
And then as a kicker, I can actually keep and maintain the policy, but pull certain amounts out.
You can.
That I can then use for, I could buy an investment property with
Yes, you
it.
can. And have the renter pay it back.
Okay, I'm loving that. And that's what you're meaning by having your money sitting in more than one place at once.
So let's play with this a little bit.
Okay.
Right now, conceptual,
Okay, guys.
everybody. This is conceptual.
Listen, if this goes over your head, you got to watch this again, or in the least, you got to actually, we're talking about how you actually set yourselves up for more success. I've been engaging with these particular types of policies now for the last 12 years, and they have helped me invest in real estate substantially and do a number of things. So I'm really in love with the conversation that we're having, so much so that even though I've only found a handful of people over the last decade that I trust to put the proper policy in place, if you click the link below and get in contact with the team there, you're actually going to learn about those policies, how to leverage them, and they could end up being one of the most perfect tools to sync up with your investment strategy of the future or your plan. So make sure that you do that. But yes, let's go deeper. Play.
So hypothetically speaking,
Yes.
and this is just an hypothetical, so double check everything. But if you were to buy a piece of real estate,
Okay.
the goal is to
Every
get 4 rates of return: cash flow,
Okay.
mortgage interest write-off,
Yes.
depreciate the asset on your tax return,
Hugely.
right?
Yes.
Because that saves
Yes.
against your regular income.
Yes.
And eventually, over time, historically speaking, it should appreciate in value.
Yes.
4 spins now, right?
Okay.
So as you're building up cash value and you want to now use that money, so you would borrow from the insurance company.
Yeah.
We don't know what that rate is. That's another conversation we could talk about. So you borrow from the insurance company, you buy the real estate, you then have the renter pay back the policy. So you're still getting those 4 rates of return inside the real estate, but now you're still picking up the dividends and interest inside the life insurance. But there's one more thing. You're now becoming a bank in the sense that you're paying yourself interest.
Wow, dude. Okay, listen, you heard
The
it all
renter is.
here. That's why we put it here. That's that mic drop. Kaboom! Dude, thank you so much for sharing that, Rob. That was money. Literally, actually could be in your pocket money. And guys, this whole idea of the benefits of purchasing whole life insurance, I hopefully that over-delivered on, oh my gosh, I had no idea that all those different possibilities and benefits actually could all break down and happen all at once. And that's why I've been leveraging this teamed up with real estate as a part of my more sophisticated real estate plan. And so, man, thank you for being here. I appreciate it.
And if I could add one thing, because
Yeah.
you're always talking the importance of long-term. This isn't something that happens overnight, right? This is always a long-term part of a conservative overall planning strategy.
Yeah.
Just to throw that out there. So, I'll make sure everyone's on the same page.
Excellent. Well, listen, Rob, thank you guys so much for joining today, dude. Appreciate it. And for those of you that are watching, if you're like, wow, I wonder if that's for me. I wonder if I should learn more about that. I wonder. If you got questions, click that link below, get with the team, and then learn what that might look like for you. In the end, I think that you're probably going to be thanking me. And so happy to generate this value today. Also, friends, make sure that you do subscribe, ring that bell, and then tomorrow I got a brand new video coming your way.